Joining us with this week's Ag Week Market Extra is Luke Swenson with the Money Farm, and we're going to preface this by saying we're taping this, Luke, the day before all of the big USDA reports. But we do know the one thing that has really been, hurting the markets on the grain and livestock future side has been the trade uncertainty, and that's not going to change until maybe July 6th. What do you see in here?
We're just kind of contently sitting to wait and see what happens. We were just in some meetings in the P&W this week, and a few of us were sitting there debating back and forth, Trump's statement of he's going to make us whole on this thing, with beans basically down $2 since the high and corn down $1, not even $1, 70 cents. You sit and look at what the actual cost would be. Say the government was going to come out and say, okay, this trade war is going on, let's carry this thing forward, but we're going to make you whole. In all reality, it's $20 billion. To push us back towards the highs of the market, which if we're putting 10%, 20% tariffs on $200 million in the goods, we can come out net ahead in that deal. Not that I'm hoping that's the way we go, but in all reality, it might be something that they might actually carry this thing farther on if China wants to keep arguing back and forth and no one really wants to take their foot off the gas on tariffs. We could see that happen, and that really could actually carry forward. In the long run, though, we think they're going to work through it. It's just world grain supply demands there. China needs it just as much as we need them, and it's vice versa. They own a lot of our debt, so they don't really want to see us go into a recession over trade issues and stuff like that, because then it hurts their credit rating. And as big as globalization is at the moment, everyone's going to feel it. So a long, drawn-out affair we think is going to be very hard to come by.
And most farmers want trade, not aid.
Yes, it's no one liked getting LDPs back in the day and playing with different pick and roll programs to try and make money. So no, we just as soon see it open. And as you're seeing, China this week's opening up and removing tariffs from some of their neighboring countries, but those neighboring countries don't really export anything, so they don't have anything to export anyway. So it still comes from North and South America, and they're going to have to square it away. So when you got South America with no tariffs going over there, us with big tariffs, and they're talking everybody's going to need more, demand's growing. The natural progress is just to diminish tariffs on both sides to try and get these back down to open markets, and you'll see it flourish a little more.
And past the reports, we're also looking at weather being the other uncertainty that we have. There's talk about a high-pressure ridge building. We don't have much weather premium in any of the grain markets, do we?
No, you can see some premium just probably from the trade side, where they're trying to build in a little bit up front there. But as far as long sustained looking at the deferred months that, this thing's going to sprint 50 cents on any little weather issue. No, there's nothing yet. If we get, say, through the 4th of July and you're still looking at the 2-week forecast and you get there and it's 95 and you're looking at pollination, all that, you're going to see some repercussion in the market rallying out that way, we would assume. And that's because we've had the last few years, we've had great pollination times for pretty much everyone except maybe Illinois one time, or in the last 2 years. Outside of that, we've had good pollination. So bumping up to 95 degrees and an early pollination, you could have some little issues there and the market will have to react. But we're going to need to be another 10 days down the road before they start doing that.
And you have historically high crop ratings, and there's already talk about higher yields over 180 on corn. So the market's having to digest through all that too, right?
Yeah, the average, we've got people saying the average guess is bouncing around 182 for July for corn reports. So it'll be interesting to see how we go into that in 2 weeks and trade out of it as well. You've got expectations that are very huge. You've got trade things that have pushed funds short. There's just a lot of bearish news built into this market. It looks the exact opposite of where we were a month and a half ago. So when we were saying sell a month and a half ago because we're building nothing but bullish news, now we've built in nothing but bearish news. Maybe it's time to just sit back, let this thing work a bit, and see what it looks like going into mid-late July.
Yeah, there is a lot of bearish news, and when we look at the funds, because of the uncertainty, they've gone short corn, soybeans, Chicago wheat. So with that in mind, if we get a little bit of a weather market, will they cover those or do they stay short?
No, if it's anything more than just a little one forecast, if you get a week or so into it and it's holding, you're going to start seeing them snowball. It's the one thing is it's like a month and a half move for those guys to really position long to short. Because you've got the leaders that'll start, and then once stops start getting tripped and you start breaking technical levels, then you'll see some more follow through come with that. So I think they'll be starting right away. The bigger question is say we get 14 days in. If the forecast is hot, are they sprinting out of shorts, or are they with 182 yield estimates, are they just going to sit there? And I think they're going to be a little more anxious to start moving to the bull side just because we're looking at all those bearish factors. And you start whittling them away with what we're looking at for ending stocks, and you start shrinking that ending stock number pretty quick.
At 2-year lows in the bean market, as you pointed out, we've dropped about $1.50 producers probably aren't doing anything right now but sitting on their hands. But I mean, risk management wise, what are you telling them if they didn't get hedged on the last rally?
The main question we've been dealing with, is what to do with old crop. New crop, everyone's been a little bit better about hedging in our office anyway. So old crop, we've seen basis really tighten up in some spots. You get farther west in the state, you see ethanol plants that you're farther away from your corn supply, and you've had less acres recently, and they've got even less acres this year. They know they're going to need to scramble for some. So you get to the central Dakotas and west, and you're starting to see those bids really tighten up. Whether they're posted or not is debatable, but you're seeing offers come in very close to strike, which we haven't seen in a long time. So that'll ripple back through into the valley as well. So keep an eye on basis, manage that first, then look at the cash side. With all this bearish news built in, we're not overly excited to be adding futures here, selling futures and fixing prices here.
The wheat market's been interesting to watch as well because we're still trading some of the global weather issues, yet the Minneapolis wheat obviously is being held back by some really great crop conditions there. So do they just rectify that with spreads in the marketplace, or what happens?
They have been. Funds have really been unwinding a lot of the winter wheat spreads they've had on for the last couple months with the issues there. But now you're getting into the area too where Australia is starting to not have they've been behind, very low on moisture. They're catching up a little bit, but they're still definitely not as optimistic as they've been the last 2 years. So that's really feeling the market. Black Sea region's not perfect, but up here the big question, which is coming tomorrow, is what are acres for spring week going to be revised to? That's maybe the last little bearish linchpin that could get thrown in if they surprise us with a couple 100,000 extra acres. Once you get past that, about a 150, 200 mile radius of Fargo is in very good shape, and that's your garden spot. So can we sustain that? Well, we're still late and dry and short in different spots. We expect those ratings to start slowly diminishing as well.
Let's move over to the livestock markets because they too have been feeling like they want to rally, but they've been held back a bit by the China trade situation and NAFTA obviously overhanging the hog market, especially here. But let's start with cattle. It's kind of been a tug of war because we're trying to move through this wall of cattle. Are we getting through it? Is the demand enough to help support the market as well or not?
Yes and no. The late winter weather issues from Iowa really helped us eliminate, if the wall of cattle was 20 feet high, it was down to 14 by the time it got here. So we're starting to see it come through. The interesting thing is you still got packers pushing borderline record margins, and you're finally seeing basis fall off, which when you're seeing that, it finally means you're starting to see that glut push its way through. Are we going to go negative on basis in the near term? A lot of guys we talk to think you're going to see them push it down a little bit for the next few weeks, but then coming out of that long-term demand, everything is still looking very solid. So we're not overly pessimistic. If you were buying cattle here, we'd probably float them for a bit and see if we can steal 5 or 10 out of the market in the long run as you're feeding them up.
Exports have been phenomenal the last couple of weeks with some marketing year highs in terms of those weekly sales, so that's helping out, isn't it?
Yeah, but there's also people too worried with, bigger rhetoric going back and forth against Mexico and different places. Everyone still needs to eat. It's still going to go, but just in the middle, all those jabs that go back and forth have everybody nervous, and they can give us limit days up and down with not too much effort to do it.
So what are you looking at longer term? What's your price projections as we move, say, into the third and fourth quarter here?
I think you're going to see a little bit more pressure going through the middle of summer, and then coming out of that, as we're working through some of this stuff, you'll probably see some demand pick up. You'll see, that this isn't just a short little buying blip, that it is more sustained demand growing and channels opening up. I'd like to see it rally. As far as saying, are we going to rally $5, $10, $30? That's going to be on some of the rhetoric, but no, I wouldn't be hedging a bunch here for this fall. I'd let it work.
Do you feel like the hog market's held together pretty well considering all of the negative trade rhetoric that we've had there, because hogs are more impacted by it than cattle?
Yes, they have. Despite some of our bigger producers in Iowa, no one's really losing a lot of sleep yet. They're a little annoyed by some of the stuff that's gone on, but they sit and look at demand contracts long term. They're getting a little nervous for about 19, just because there's been a lot of supply that's been pushed in by increasing production capability in the U.S. But beyond that, they see it as a little bubble. They've been riding a great basis play for a long time. They've been riding great demand. They knew they were going to overbuild it a little bit, but no one's looking at 90s going back to 7-cent hogs. That's not a concern by any of them. They've got very cheap feed right now. We've got guys locking up feed for 6 months on cattle and hogs just because it's so cheap. You got such a value play, you can do it. So if you're managing your input side and you've got a decent cost on pigs coming in, you're going to be just fine.
And the slaughter figures have backed off here, so it looks like we've moved through the biggest numbers.
Yep. So, like I said, it's just going to be like the cattle side. Are we going to get a little more basis pinch in the summer? I don't know. I think they're coming out of it more so than going into it like the cattle are.
All right. Well, I appreciate your time as always. Thanks for joining us. Luke Swenson with the Money Farm. That's this week's Ag Week Market Extra.